In January 2025, a series of wildfires caused unprecedented damage across LA and San Diego. In spite of scientific evidence linking the rising threat of natural disasters to the climate crisis, the Trump administration plans to deregulate oil, gas, and auto industries while hobbling the government's ability to regulate, research, and provide disaster relief. Nichibei News reporter Tomo Hirai interviewed Bradley Yamamoto, MIF Insurance Agency President, to discuss how the homeowners insurance industry has reacted to the rising threat of natural disasters and to give some tips on how to drive down your insurance costs.
I've been working with MIF Insurance for about 20 years or so, on and off various roles, but I took over as president in 2021. Our agency has been around for over 80 years, and we really were founded right after World War II, when it was really difficult for Japanese Americans to procure insurance. So there was a big need for our agency, and we've been servicing the San Francisco and Bay Area since then. We service both individuals for their automobile or homeowners needs, and also commercial clients for their businesses, autos, workers' comp, things like that. For our agency itself, we rely heavily off of referrals. So all of the business that we generate is because our clients are happy with our service and they recommend us to somebody else. Really, our main goal is just customer driven, and we want to make sure that each of our clients feels comfortable in knowing what insurance they have and what it will do for them in the event of a loss. So basically the companies now are tightening up their underwriting guidelines, and what they're looking for is which homes pose the largest risk to them. And so unfortunately in the Bay Area we have a lot of older homes, so those are going to be subject to more scrutiny. The biggest challenge right now is for the people in what are deemed high brush areas, where you see a lot of foliage and things like that. Some insurance carriers are pulling out of that area altogether, or at least just eliminating the zip code from where they're writing insurance. So in those instances, people in those areas really have to be aware of their policies being in jeopardy. The best way to go about that is to be proactive, contact your agent, see if there's other possible insurance companies that might be willing to write it as a backup, and just shop around really at this time.
Bradley explains that insurance companies are imposing stricter property inspections, such as using satellite imagery, in-person inspections, exterior inspections via drive-by, asking homeowners to take photographs of their homes, and even interior inspections have become more common.
At this point in time, we just don't know. There's so many different working parts. There's companies that are exiting California. There's some that are putting holds on where areas that they'll write in. Some are still dipping their toe as to whether or not they'll come back, but they're putting tighter underwriting restrictions on these properties. And then in addition to that, the Department of Insurance is working on all these different state legislations that are trying to help it so that insurance companies are more motivated to write policies. But again, we don't know how that's going to really impact the market. So the best thing that we can hope for really at this point is for it to just kind of flatten out first and then kind of take it from there.
Most insurance companies use replacement cost estimator software to calculate how much it would cost to rebuild your home from the ground up in the event of a loss. The estimate is based on your home's location, size, and the year it was built. The software isn't completely accurate, so it's best to consult your insurance broker to determine your coverage needs.
So for myself, for example, I'm not immune to what's going on in the insurance market. I actually had to replace my own homeowner's insurance. And so throughout that process, it made me reevaluate how much coverage I needed in various areas. For the most part, the policies in California are pretty standardized, where you base your coverage off of the amount of coverage you need on the dwelling itself, which is in the event, let's say a catastrophic loss happened, a fire burned down your entire house, and you had to rebuild it from the ground up. How much coverage would you need? And from there are additional coverages built into the policy that are basically percentages of that dwelling coverage. So let's say, for example, you needed $1 million to rebuild your home. The various coverages would be percentages of that. So you'd have your personal property percentage, which would be 60-70% of that dwelling coverage limit. So you might be looking at about $607,000 or $700,000 in personal property coverage, and that's automatically included generally in the pricing. Well, first off, one of the best ways to actually keep your insurance down, if you're lucky enough to still have your policy in place, would be to seek out higher deductibles. In general, the higher deductibles you go, the lower your premiums will be. And the reason being is that the insurance companies are viewing kind of the small claims as negatives on your account. So the more small claims that you put in, the more jeopardy you put yourself at risk of the company possibly non-renewing you. So if you're not going to put in these small claims anyways, you might as well take advantage of some of the savings. Generally, our clients are choosing somewhere around the range of a $2,500 deductible. There are options for higher, but it really depends on your risk retention.
Some insurance companies offer discounts for forms of membership such as AAA and Costco, discounts for home improvement products for water leak detection, home security insurance, wind and fire mitigation, and certain roofing upgrades, and discounts for insurance bundles, for example, getting auto, homeowners, and life insurance from the same company.
The biggest thing, honestly, is finding a good insurance agent. You really need to be able to trust that person, that they're giving you all the correct information, letting you know if your policy suits you and what exactly you're looking at.
To contact MIF Insurance, call 1-800-747-6434 or email info@mifinsurance.com. This has been Max Nihei for Tomo Hidai for Nichibei Cafe.